America and indeed the world wait tomorrow's presidential election with bated breath, but how are the markets responding? Joining me down the line to discuss is Shane Brett from Global Perspectives. Now, firstly, Shane, if we look at some empirical data, namely the non-manufacturing PMI due out today, many analysts believe there is a positive perspective on current business conditions. A small drop to 54.6 is forecast, contrary to the rise in manufacturing PMI. But Shane, what are you expecting?
I'm probably expecting the latest release of data to be probably stable. I know the forecast is for a slight drop, but if you look at the figures for October, when the index went from like 53 to over 55, that was an unexpected increase, and I think was an indication that the US economy is starting to strengthen. So that, you know, this slow, gradual economic recovery is underway, and obviously it's only at early stages, but I think that it's gradually getting stronger as time goes on.
Just how big a boost was the NFP figures for the election run, do you think?
Well, I mean, certainly for Barack Obama, they were great news. I mean, obviously the U.S. economy needs to create about 150,000 jobs a month to keep its unemployment level stable. So to have literally the week before the election result, to have a higher figure than that come in, and really quite positive data on the employment front. So I think that's very good. Also, an important point about that as well was about 10% of those jobs were in the construction industry. So, and as you know, that it's always the housing market that tends to kind of lead the economy. So I think we're starting to see a slow rebound in prices on the construction side in the US, with prices stabilizing and new starts and home builds. So I think it was good news as well to see that those employment numbers reflected an increase on the construction market.
The East Coast is still trying to resume normality after Hurricane Sandy. Barclays estimates the storm will knock 0.2 to 0.3 percentage points off the US economic growth in the fourth quarter. Is this in line with your expectations?
Yeah, I think it's going to affect economic growth slightly. I mean, when you compare it with something like the potential of the fiscal cliff, I mean, it's not going to have anything like an impact like that, potentially. But certainly, with the main business centre obviously being in New York and that whole northeastern corridor, maybe 30, 40 million people living there, and obviously you have a week or so of perhaps longer of economic activity that's badly affected. So I think there will be a potential knockdown on economic growth because of that, probably just slight. But again, going back to the point about construction, there's going to have to be a huge amount of reconstruction in that area, and I would imagine that whoever gets elected will be sending a lot of federal US funds that way to help the northeastern states in their reconstruction efforts. So on a positive note, more longer term, that might actually increase GDP as reconstruction takes hold.
The Japanese governor said if the United States failed to resolve the fiscal cliff, it would hit the US economy hard, as well as the world and the Japanese economy. So each G20 country will urge the United States to firmly deal with it. Do you agree with this?
Yeah, I think the potential for the fiscal cliff now, really, there's a possibility that this could cause major turbulence in the U.S. economy. The attention so far to date has been primarily, understandably, on the U.S. election. But really now, once this is out of the way next week, which I would expect Barack Obama to win, probably by quite a tight margin, the 7 weeks really for the U.S. parties to come together and try and agree a set of spending cuts to put in place. Otherwise, this fiscal cliff, which could amount to 5% of GDP, will really probably paralyse the economy, because it will be such a sudden slowdown in spending in quite already a lukewarm economy that's only gradually recovering and getting on its feet again. So if that's bad news for the US, I mean, the expression about the US, catching a cold and the rest of us get flu, that is definitely true. China has had a slowdown recently. Its manufacturing figures are starting to stabilize now. So what that really wants to see is, if especially as the euro crisis is kind of rumbling on, it wants to see a strengthening US economy to take its exports. So if that is hit by this fiscal cliff and this major slowdown in US government spending, well, that will then affect very negatively China and some of the US's other trading partners.
From an FX point of view, regardless of who wins, do you think the markets will see an influx of action post-election? Are investors looking for some direction at present?
I think they're currently looking for some direction. Actually, if you look at some of the major rates, like I'd be looking at the euro and to say the likes of the Aussie dollar. I know we've seen some currency movement on the Japanese side, but I think that's probably more a reflection of what's going on in the Japanese economy. But against the euro, it's since the major movement back to around 130, it's been holding within that kind of parameters, maybe a couple of percent either side. I think there's a very much a wait and see attitude at the moment, and even though maybe a lot of people's eyes are on the election, I think a lot of investors are really looking at this end of year date for this fiscal cliff issue to see if there can be some sort of agreement in the US Congress.
Some analysts have said the economy is on course to enjoy faster growth in the next 4 years as the headwinds that have held it back turn into tailwinds. Do you believe this is the case? What is your outlook for the US economy moving forward, Shane?
So my outlook for the US economy, and this is something in the longer term I would follow very closely, it's actually very positive. I mean, if you look at over the next, say, 4 years, obviously, in terms of the electoral cycle, but also in terms of maybe the next decade or so, the US has a very healthy demographic structure. It's a low age society. It still has plenty of immigrants and families that are having large numbers of children, still very entrepreneurial. It really importantly in the next decade or so, as there is a bit of a crunch across energy and commodities and food, the US still is obviously discovering a huge amount of cheap gas it didn't realize it had as part of the ongoing kind of fracking it's doing. And very importantly, the US has about a quarter of the world's arable land. So that means its food supply should be very secure. And finally, when you look at things like manufacturing, there's a potential for the US to in 3D printing, which is this new area of the economy that the US is kind of leading at the moment. That could have a huge effect on manufacturing and the way business is done, and actually involve the onshoring of jobs from the likes of India and other developing nations back into the US. So even though the US is gradually coming out of a slow recovery, I think a lot of countries would actually like to have the problems the US has in that its banks are in a much healthier position than the euro. The Federal Reserve is very keen to try and stabilise the economy, even if we don't know the long-term effects of quantitative easing. And at the same time, it's also getting stronger on the manufacturing and construction side. So my long-term output or view of the US economy is that it is very positive. It has regular periods of self-doubt, like in the 70s, when it suffered with the Vietnam War and the rise of the Soviets as well. But in actual fact, it has always tended to bounce back from that very strongly.
Shane, thank you for your perspectives once again. Well, that's all we have time for at the moment, but click back to Dukascopy for a Euro-themed Targets and Focus interview with my colleague Rowena Harris-Doughty. Bye for now.